Hello and welcome to this fifth episode of Investing Not Rocket Science. In the first episode, I defined a basic framework for my investment portfolio. It's a $1 million portfolio, and I'm looking to invest into equities and bonds. I intend to actively manage this portfolio by either buying and holding or buying and selling. I don't intend to use leverage. I may use leverage funds, but it's not to exceed the size of my portfolio. The investment horizon that I have is greater than 5 years, and I look to invest into the developed and emerging markets. And the benchmark that I've looked at for this investment portfolio is the MSCI Investable Market. All right, now in this episode, I intend to look at semiconductor stocks. I'm excited to have one or two of these stocks in my portfolio because I think there's great value to semiconductor stocks considering how much they benefit from the progress that we make as we move into the future. All right, in this episode, I'm going to consider Nvidia, AMD, Infineon, and ASML Holdings. Okay, company financials. Straight away, I can see that Nvidia is relatively expensive and Infineon is relatively more attractive. In terms of unlevered cash flow, except for ASML Holdings, all of them have positive unlevered cash flow. And net income to shareholders, again, I see that Infineon is probably the most attractive stock amongst these four at this point in time. Let's move on. Debt to equity, nothing surprising here. ASML does not have any debt on its books. 39% for Infineon, AMD at 5.2, and Nvidia at 55.8. Okay, in terms of return on common equity, Nvidia leads the way. ASML leads the way with 59.4%, followed by Nvidia and Infineon. In terms of current ratio, again, no surprises. Nvidia has a lot of assets that it can put to use, and so does AMD. While Infineon and ASML are in the range of 1.3 to 1.8, which is an ideal current ratio to have. Okay. PE ratio, you see, I can see that Nvidia and AMD are the most expensive stocks with 95 and 88 PE ratios. And just as I thought, Infineon is most attractive at an 18.9 price earnings ratio. In terms of volatility, Nvidia and AMD at about 60%, and Infineon and ASML at about 42%. This also has to do with the fact that the US markets have been a little more volatile than the European markets. That big, I would have expected Nvidia to have larger inventory. Capital expenditure, 15% for Infineon. So not only they are pumping in some money into the future. Again, possibly a good sign. Nvidia at 5.6 and ASML at 6.1, and no capital expenditure for AMD. Okay. Interest expense, Nvidia has the largest interest expense, and pretty much flat for ASML. AMD has seen a little bit of rise in its interest expense in the last few months, possibly due to a rising interest rate scenario. Okay. Unlevered free cash flow. Infineon again is pretty flat at about 1.7 billion. ASML has gone is gone negative in terms of its cash flow, and both AMD and Nvidia have lower trends in unlevered free cash flow. Okay, in terms of fair value, I've looked at two possibilities: the DCF and the DDM methods. I'm using Investing Pro here. And Nvidia on both methods is already trading above its expected fair value. AMD, again has some potential in the DCF method, but obviously in the DDM method it doesn't, because it doesn't issue any dividends. Infineon is the only stock that has potential upside on both methods, while ASML Holdings again is um, trading above its estimated fair price. Now, there is no rule that a stock needs to trade around its estimated fair price. A stock could very well continuously keep rallying and moving away from its fair price, and flatten out at a time when the fair price would probably catch up with the fair value would probably catch up with the stock price. So, but when evaluating stocks and looking to add them to my portfolio, I always find this to be an interesting method. Okay, in terms of its chart, although it is at the top end of its trading range in terms of its price, um, if the market does turn, it is likely that the stock will turn as well. And the question really is, if the stock price moves down to about 27, because the market is turned, would that be something that would bother me? Is the volatility something that suits my portfolio and my investment or risk appetite? Is the real question here. Um, Infineon has been in a rising trend since 2010, and no reason why it wouldn't continue. Okay, at the end of this evaluation, the portfolio action that I intend to take is to buy Infineon and put Nvidia, AMD, and ASML Holdings into a watch list. Other semiconductor companies that I have not evaluated yet are Intel, Qualcomm, Texas Instruments, and ST Microelectronics. In the next part, I intend to look at evaluating some bonds. Now that with this, I would have three stocks in this investment portfolio, I think it's time to consider some bonds in the portfolio as well. Also, I would like to look at what the current trends are in the markets, and if I should hold back on any of these additions for a later point in time. This is Investing Not Rocket Science, a series on building and managing an investment portfolio. None of this is expert advice. I'm just learning alongside you. We can connect on LinkedIn. Please visit our website for the terms. And thank you very much for watching and being part of this series. I look forward to seeing you in the next part. Thank you.